Hello, it's Martin Straith, and this is Market Musing Live for September 24th. Today's topic is gold. Now, before we start on where gold's going, let's have a quick look at where it's been. In our first publication of the trend letter in March 2002, we recommended that subscribers load up on gold when it was trading for under $290 an ounce. Now, anybody that's followed gold knows it went on a huge bull market run here. But one of the biggest mistakes most investors make is they never have a plan to get out. They just keep thinking it's always going to go higher. But every market needs a correction. And if you get out within 10-15% of the tops and in 10 to 15% of the bottoms, you're going to make a lot of money. But if you just hold on, you're going to lose a lot of profits. Now, so we recommended it 9 years later. Our models triggered in August 2011 that gold was very overbought, and we sent out a sell signal at just under $1,800. And our subscribers got gains of well over 500%. Gold itself went up 500%, but the stocks we bought did much better, many of them. From that sell signal, the price of gold has dropped over 40%, or almost 40%. So again, our models triggered that this is not looking good, and from that point on, we have had two bottoms at 1180 to 1200, and right now we're sitting at about 1220. So those who just bought and held gave up 40% of those profits. Now, looking at gold today, you really need to keep an eye on this. We've been highlighting this to our subscribers for a couple of years. This red diagonal line has been powerful, powerful resistance for gold. You can see throughout the last couple of years, it's made numerous attempts to try and break back out through that, unable to do so. So this is a very key resistance level. Another one that we've highlighted to our subscribers for the last few months was how gold was forming into this wedge pattern. And what that basically meant is very soon in here, it was either going to break to the upside or to the downside. Now, our models had called for a downside breakdown, and sure enough, that's what's happened. So now we're sitting here that gold is, we've got key support at those previous bottoms here. So gold's either going, that support's going to hold or it's not. So let's look at a bullish scenario. We need to see the support here hold, and then gold break up to 1260, and then 1280, which is this green previous support level, which is now going to act as resistance. Plus it converges right here. You can see this line and that line are converging right about 1280. So if it can break through that resistance line, that's a good start for gold. It then will have to break through 1300, then 1325, and ultimately start breaking through its previous highs at 1350, 1375, 1400, and then 1440 or 1470. If it can work its way all the way through that, then it's going to come up to major resistance at 1530 to 1550. Now, for our subscribers, when gold was peaking at about 1930, our models highlighted that 1530 was going to be very, very major support for gold. And as you can see, throughout a good year, that support level held. As gold bounced off, it kept supporting gold all the way down. We sent out a newsletter right about in here saying, really watch this level now. Because if you're still holding stock, be careful. That should be your sell signal. Because if it breaks through here, it's going to be a major correction. And major it was. Now, and since then, it's just been going down, down, and down. So for gold to really have a move, first we want to see it break through this. This resistance here is important, and then it's got to work its way through all those previous highs. And then if it can break through here, we expect it'll be a similar multiple effort, but when it finally does it, it should be a major move up. So keep an eye on that. But understand, we're still in a bearish scenario here. Until we can break out of this resistance, you've got to think bearish. So the first thing we want to look at is this key support here at 1180 to 1200. That on the bullish side has to hold. Now our models are calling that that's probably not going to hold. It'll probably bounce off here, and a lot of people will probably get trapped thinking, oh, we've made it. You're going to see a lot of newsletters say this is it, gold's going to the moon now. Nothing's going to go straight up. Watch these resistant levels. So we will trigger when we see that gold's going to make its move. But right now, our models are saying, watch this 1180 to 1200. Then our call that we made back in April 2013 for 1070 to 1090 is very valid. Note that our models also are calling for a potential low of sub 1,000 in the 875 to 950 range. We will be buying gold again, but we do it when our models tell us, not when our hearts tell us to do it. We take the emotion out of here. Our models have been deadly accurate on gold. If you really want to, understand this stuff, you've got to follow the models. If you want to keep up to date what we see happening in the global equity, commodity, bond, and currency and precious metal markets, you can sign up for our free Market Musings weekly newsletter. Just go to the website, just put in your name and email address, and you're on the list. Also, seriously consider becoming a subscriber to the trend letter, and then you receive all our trade signals. So when we give a buy signal, you'll get it. When we give a sell signal, you'll get it. And we tell you why. We don't just throw out numbers here. These are our models. Our models have been dead accurate. Now, check out our results. We've looked at a ton of newsletters. I don't see anything out there that comes close to what we've been able to do. On average, our net gains, that's gains minus losses for every single trade we've made. We have 6 templates. So right now we've only got these 3 active right now. We don't have any stocks in these ones, but this is the history for about 12 years now. Every single trade we've made for each portfolio, this is the average gain you've made. Conservative, 80%. Moderate, 111%. Aggressive, 42%. China factor, 249.8%. That's the average. Value stock, 89%. Oil and gas, 76%. With a subscription, you receive weekly reports, not monthly like most newsletters. Plus, you get quarterly reports on global equity, currency, bond, commodity, and precious metal markets. We also provide a 90-day money-back guarantee, meaning you can sign up, you try it for 90 days. If for any reason it doesn't seem right for you, just let us know and you get 100% of your money back. Listen, if you're serious about becoming a better, more successful investor, subscribe now because we can help. Just go to thetrendletter.com and hit the subscribe button. Have a great day.